Hello, traders. We're 2.5 hours into trading. It is Friday, January 8th. Let's see what the market's doing. We've got a little bit of pullback taking place right now. You can see how the market opened up at a new all-time high. As I mentioned in my pre-open market comments, which by the way, go to the description section of this video. You can find a link to my Twitter feed. Follow me on Twitter. You'll always know what I'm doing before the market even opens. I had mentioned I do not buy gaps higher to a new all-time high on the market. It might mean that I miss a move like this, but that's okay because later in the day, I'll have a chance to join. And after this little pullback right here, I'll be able to evaluate relative strength and I'll be able to dramatically increase my probability of success. The problem when you jump on these opening gaps higher is that oftentimes they reverse. You see a lot of selling, and there was a classic example of that Monday. That was the first trading day of the year. We had the market open gangbusters higher, and that opening price was the high of the day. So anyone who rushed in thinking that we're off to the races really paid a heavy price for that because the market reversed the entire day. The S&P 500 was down 100 points by the close of the day. And this is the opening gap higher that I'm referencing right here. That was the start of the new year. And look what happened the rest of the day. That's why I do not buy opening gaps higher to a new high on the market. If the market races without me, I just showed you, I'll have an opportunity to increase my chances for success later in the day. These market pullbacks are super important because they allow us to gauge relative strength during that market pullback. So when the market's coming in like this, that's when you want to be using the relative strength searches. Stocks that are treading water or grinding slightly higher, those are the real McCoys. That's where the bid is. Buyers are lined up. Every time they try and hit a bid, there's a buyer there. There's a buyer there. There's a buyer there. Eventually, those stocks take off. The edge for us is if we happen to get on the wrong side of the market, let's say that the market falls here, we think this is a good buying opportunity, we get long some of these super strong stocks, and then the bottom falls out of the market. These stocks are going to tread water. They're going to hold their own very well. Chances are we might be able to make money on the trade. Certainly should be able to break even on it. If we do take a loss on it, it's probably going to be minimal. That's not what you get when you trade the S&P futures. You come in here, you buy this, and that happens, you are going to lose money. That's why we focus our trading on stock. Now, when I do see a big market move coming up like this, then I do tend to trade futures. Rather than do short stocks, I find it much better during these moves to short the S&P 500. I am currently short the S&P 500 as I record this. So we're going to go back to today's price action, and then I'm going to show you some things that are unfolding price-wise that have me a little bit concerned. First of all, we've got this downward sloping trend line right here. And I'm going to talk about price action and the market mainly today. So I'm going to set an alert so that you can see the price action that I'm referencing. There's a high there, there's a high there, there's a high there. Let's draw that trend line. Now that would be an alert. I would not suggest we have an explosion alert. I'm going to take this off for SSYS. Yesterday you saw me with a bunch of explosion alerts. We've had a ton of them today. I want to talk about the price action of the market and what I see happening. So we have this gap higher, market really can't advance. Then you have these two long red candles. That is a warning sign. If you had buyers lined up, anxious to buy the market, they would not let these red candles exist. There would be buyers all layered in here just waiting to gobble this up. But because that air pocket happened, you know that that's a major warning sign. On a big market rally like we've had over the course of the last week to 2 weeks, in fact, I mean, we're in an 11-year bull market rally. We are in a 9-month bull market rally. The buying pressure is super strong right now. So bull markets like this, they die hard. We've had a big rally in the last week. That means the bid is strong. Every time you get a market pullback, buyers are looking to come in. So in the initial stages of a market pullback, you're going to see violent snapback rallies like this. So you get this drop and then boom, 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 right back at it. But you can see how the sellers came right back in. Here we go. The bottom line is, while I'm doing this video, I think we're heading lower. I've got another indicator that's going to show you why I feel that way. This is my 1OP indicator. You can see yesterday, climb, 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 bearish cross right here, which comes into play right about here, which is telling you, okay, you should take profits on your longs in here because I see some trouble coming. Get this nice little market dip in here. Again, look at how predictive, not reactive, predictive this indicator is. It took me 10 years to develop. So there we get our little bit of a pullback right in here. Look what we have right here. Bullish cross. 1OP indicator tanks, crosses. That tells us we can get back in. That ends up being a nice rally. The indicator doesn't give us much of an opinion one way or the other the rest of the day. We gradually inch back higher. So what happened today? Well, you can see how it was trending into negative territory here from the start of the day. We get this big drop. This is the tell right here. In addition to some price action that I'm going to be pointing out to you, we get this bullish 1OP cross right in here, which is somewhere right in here. It didn't catch the bottom, but it was in here. Okay, so prices are going to bounce. We get this big rally and this spike in the 1OP indicator. What happened since that cross? Down, down, down. That is what we call a bearish divergence. The next 1OP cross is probably coming up pretty soon here, and when it does, I'm expecting us to challenge the low of the day and to take that low of the day out, perhaps even the support level in here. Right now, we've got an incredible amount of bullish speculation. There are so many stocks that are going parabolic. They're in the EV space, so any kind of efficient, clean energy is rallying like mad. Any cryptocurrency stock rallying like mad. Human genome stocks, pot stocks, they are not just rallying, they're going parabolic. Well, that's fairly unusual. And a lot of these companies, they may have revenues, but they don't have a lot of profit to speak of. We've also got a market that's trading at a current PE of 40. Lots of warning signs out there. So I believe that the market there's a potential for a blow-off rally, but boy, would I be careful. As far as right now, today, right here, I see some trouble ahead. So here's why I think that. You got this pullback right in here. You've got a compression. Prices really starting to tighten up. Now you know you're due for a bounce after a little pullback like this. And we know that buyers are still going to be out there because of the bull market that we're in. So you get this big green candle right here. Immediately, it has reversed. This is a bearish engulfing candle right here. Again, if there were buyers lined up and the buyers were super, super anxious and super excited to buy every single dip, you would not get a long red candle like this. In fact, after a long green candle like this, you would see boom, 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 up through the downward sloping trend line and probably right through the high of the day. That's the type of price action that you would expect. But because we've been gradually leaking oil, these bounces like you see right here, that was a big bounce. You get your drop, big bounce. You get your drop, you're going to see another bounce up to here. But gradually, as the selling pressure remains persistent, you're going to see smaller bounces. And if we take out the low of the day, those bounces will really start to fade and you'll see an acceleration to the downside. Number one, bullish speculators will be getting flushed out of the market. Number two, you'll have some sell programs starting to kick in as well. So they kind of feed on themselves. I would be very careful trading this market today from the long side for exactly this reason. Does this mean that you go out and buy puts? I don't know. First, we've got to see some technical breakdowns. We did have a breakout on the S&P 500 above a channel, And I'll show you that channel. It's right here. So let me draw it in for you so that you can see it clearly. When this happens and you go above the channel, that's what we call a bullish climax or a buying climax. So yes, and then you tend to get these outlying bars here that pull back below that, and then you get selling on the back side of it. In fact, accelerated selling. Well, let's see if we can find a chart that did that before. There's one right here. And this is a warning that I put out to all my members right in here. There's your upward sloping trend line. There's your buying climax, and there's the back side of it. Pretty nasty because everyone is leveraged to the hilt, which, by the way, right now we have on a dollar basis the highest margin borrowing that we've ever seen in the market. That means that investors are buying stocks on margin. The VIX is very low. That means that the fear level in the marketplace is also very low. Why would it be low? We just posted a horrible unemployment number today. There were 140,000 jobs lost. I believe it was in that neighborhood, 144,000 jobs lost. That's not good. We've got coronavirus continuing to spread. Experts are saying it's going to be 6 months until the vaccinations have a material impact on the spread of the coronavirus. That means that it's going to be another quarter or two until stocks can catch up to their valuations. So I see a lot of dark clouds out there. Now, I also know that these buying climaxes, they can go a lot higher than you thought that they might. So right here, you've got a compression. And look, you had really nice rally before it finally reversed. But when it did, it was time to get the heck out of the way. So watch the price action today. If we close back below the open from yesterday in the next day or two, that would be a sign that you're probably going to want to get out because that would result in a couple of long red candles closing on their low. And that would be a sign that we're going to see a little bit of profit taking in here. Now we've got earnings season coming up, so that is bullish. Buyers tend to be very engaged ahead of earnings announcements. So I don't like what I see in the market today. I am short the futures. I'm looking for this downward sloping trend line to continue, and I'm looking for the bid to continue to soften until finally we take out the low of the day, and then we have a chance to see some long red bars. Now, if we come down to the low of the day and then we waffle around and we can't get through it and we spend a lot of time there this afternoon, then the low of the day is probably going to hold and we're not going to see that big washout. But this is your warning sign. Two long red candles here. So watch for these bounces. If they start to be smaller in magnitude, then you know that the sellers are very, very persistent. And we're just about on that bearish cross right here. I can't really go out and show you any stocks that I would be shorting because I'm just shorting the overall market, the S&P 500. I'm really not looking to short individual stocks. I would prefer that on these little bounces that we get in here like this to be riding some of the stocks that are super, super strong. Yesterday, during the video that I recorded, I showed you this baby, ARCT. It came up on a bullish explosion alert. That explosion alert came out somewhere, I believe, in here. And you could see that the stock rallied from $66 all the way up to $81 today. Pretty nice move. So I hope that some of you caught that. I also had JMIA came up on an explosion alert. That one ran its course pretty quickly. So that one you kind of had to be in and out. And let's see if I can bring up that chart. And you can see there was the explosion alert yesterday that we got, and then it started to retrace. Once you start to see these red candles and it no longer can hold that high, half of this long green candle was given back, that's time to take profits. But we got that alert down in here. So nice trade. No follow through in the stock right now. You've got a downward sloping trend line right in here. So if I were going to watch this stock, here's how I would trade it. I'd click here, and I'd click here, and I'd draw a downward sloping trend line. If the stock happens to break out above that downward sloping trend line, I might be interested in it. Today, this stock has very little relative strength. You can see There's the market. It's been kind of drifting lower in here. Well, the stock's been drifting lower too. I want to see drifting lower, but I want to see a stock that's got an upward sloping 45-degree angle. I can show you a bunch of them. We've been on them today. And let's go into heavy buying. That's one of my favorite searches right out of the gate. Of course, there's Tesla. Tesla higher, continues to grind higher. This is a nice little bullish flag. You can see the downward sloping trend line. This would be a good entry point for a Tesla trade on the long side. See the market's bouncing a little bit in here, so it's going to get a little bit of help from that. I should get my alert pretty soon here if the SPY breaks up above this downward sloping trend line. That is an alert line, and there you go, right there. That's how the alerts work. That's why we set the alerts. You don't have to babysit a stock. You wait for that price point to be breached. Here's Baidu. Let's say that I wanted to get long Baidu throughout the course of the day. Click on that. Click on that. Stock can get through this downward sloping trend line. I'd be interested because that is a bullish flag formation. Go into the daily chart and take a look at this one. You can see a bullish flag on a D1 chart, a daily chart as well. Downward sloping, boom, there's BIDU. Very, very strong. Roku, nuts, just going nuts here after that breakout yesterday. There's your downward sloping trend line. The stock looks actually pretty good, and there's your relative strength also. Let's put up the 1 OSI indicator. That helps us see that relative strength. Orange line above zero, which it is. We know that we have relative strength. Market's been drifting lower. Stock has pretty much been holding its own. Also, it's been able to hold all the gains so far from today. That's a good sign, especially with the market pulling back and the stock surging higher. That is a very bullish sign. I think Roku's probably going to continue to push higher. We're going to continue to take a look at other stocks that might fit the bill. So go into AI, see what that's doing. Take a look at that one. And that one also looks good here. So we've got that happening on a downward sloping trend line that's been violated to the upside. Very nice price action. So this is a relatively new stock, not a lot of data points, but this is still nice because that downward sloping trend line has been broken to the upside. So yes, that looks like a good long, very good, strong price action today. Continue to click through. Look at these. I had mentioned to you earlier that a lot of these stocks are going parabolic. And I may be getting stopped out of my futures trade here pretty soon. I've got it just above this point right here, which is my entry point. So we'll see if it can clear that. But BILI is an example of the type of price action that we're seeing. I mean, these stocks have gone absolutely parabolic. Plug, here's another one. Look at that price action from down here to up here. MARA. Are all these going to be that good? It reminds me of the dot-com bubble where all you had to do was put .com behind the name of your company and that stock would absolutely take off in the late 90s. Well, right now, if you're in pod or EV or some of the other hot sectors I mentioned, these stocks are all railing. Not all of them are going to make huge money. Some of them are not going to succeed. So those all look like decent plays. I'm looking for anything decent here. NIO, this is one that I do like. You can see how it's gotten through to a new relative high. It pulled back, made a higher low. Nice upward sloping trend line right there. Broke through this downward sloping trend line today and through horizontal resistance. It's near its high of the day right now. Riot, we're going to ignore that one. A lot of these stocks, when they have super big runs up higher, we get the bullish explosion alert, and then we get the bearish explosion alert when it gives up a lot of those gains. We don't trade against the move that's been taking place. So if Riot's up huge for the day, we ignore any of the contra alerts. And you can see how Riot's up huge. So we don't care about any bearish explosion alerts. In fact, if anything, and I see a stock that's been up like this and I get a bearish explosion alert, what that does is it gets it on my screen and it says, hey, remember this guy? It was really hot today. is pulling back, and there might be an opportunity for us to get in on this during this pullback. So what I'll do is I'll take that alert when I see it, and I'll click here, and I'll click right here, and I'll draw my downward sloping trend line. Stock can come in as far as it wants. I don't care. This downward sloping trend line is going to continue to follow it down. And if the stock breaks back above that downward sloping trend line, then it might be ready for another leg higher. So that's how we trade the bullish explosion alerts. We only want to trade them in the major direction that is taking place. So NIO, I'm going to go back to one more time. And yes, I do like this price action. I do like the relative strength here. You can see how the stock has been pushing higher, even with the market drifting lower. It opened higher. It has a nice steady uptrend today when the market is pushing lower. It's got a nice breakout, hasn't even come close to testing the opening price today or the low of the day. So yes, I think NIO sets up really well. And on this one, you might want to consider selling an out of the money bullish put spread. We're coming into earnings season, so it's super important that you check earnings dates. I don't have one available for this, but you can see that it announced on November 17th. So it's probably going to announce sometime in February. If I were going to pick a point that you might want to sell that bullish put spread at, I'd want to go at least, this stock has a lot of option implied volatility because it moves a lot. I would go as far out of the money as I could, make sure that the spread expires before the earnings date, and I would key off of this $50 level. So if you could sell a 50, 47.50 bullish put spread 3 weeks out, and you could collect 50 cents for that, I think that is a really decent setup. This stock to me looks like it wants to continue to push higher. So that's one that I really like. Let's take a look at UNP, see what that's got. That's a really nice breakout here. Hover over the earnings date, 121. We don't have enough time to get any bullish put spreads off. In fact, most companies are going to be announcing within the next 2 to 3 weeks. So what you want to do is go into this search right here in Option Stalker and check out buy into earnings. And look at all these stocks in here. Well, I got to filter them out somehow, so I'm going to make sure that they've got good option liquidity. Once I mark that, my results go way down. Now, these stocks have a 75% chance of rallying into the earnings announcement once they are inside that 2-week window. These are all already inside the 2-week window. So when we're looking for stocks that we might want to day trade, this is a great search. You can also swing trade some of these. And let's go in and see what's up today. UNP was one of them. Let's see what NEE is doing. You can see that's continuing to move higher. INFY. There we go. Bullish explosion riot. We're going to ignore it. So check this list. This is a really good list, and you can find stocks that have been fairly quiet, that haven't taken off, that are now taking off. In fact, yesterday I traded CSX, excuse me for that tongue twister, beautiful downward sloping trend line, bullish flag formation, breakout to the upside, close on the high of the day, close above resistance, follow through today, rallied, and now it's kind of flatlining. So it hasn't been able to move higher, but it also has not retreated. It's been able to hold all of its gains, even with the market drifting lower. That is a sign of strength. So I like this one, especially if it can get above this horizontal resistance point right in here. So I'm going to click on alert. I'm going to double click on the high from that last bar, and there's my alert line. If CSX breaks through that, I'll know that I have a potential long. That's how we trade. Look at the relative strength there. Orange line above zero. We can also search for this using our custom search engine. And I just released custom alerts for Option Stalker Pro members so that you can configure these. You enter the stocks that you're tracking. When the parameters are set and the stocks are set, you will get a bullish alert down here in the corner when the conditions are right for an entry point. Thank you so much for watching. If you like the content, please subscribe to this YouTube channel and turn on your notifications. You can see how this little rally that we had here is starting to peter out, and we should see this downward sloping trend line stay intact. It poked through it very, very briefly. I don't think that's enough to attract buyers, and I believe that we're going to continue to drift lower, and each one of these little bounces is going to be smaller, and we're going to test the low of the day. Then what happens after that, we'll see. We spend time there. We'll probably end up holding the gains fairly well today. Actually, not the gains. We'll close a little bit lower, but the market will hold up. If this low is taken out, that's where you have to watch for possible big selling late in the day. I hope that that doesn't happen today. I'd like to see my futures position make some money, but ideally the market does find support and it rallies late in the day because it's Friday and we're going to be looking for option lottery trades in the last hour of trading where we buy options, call options, hopefully today, for pennies, and we sell them for 20, 25, 30 cents. We do that in the last hour of trading. Love that strategy. It's a great way to end the week. Again, thank you so much. Please give this video a thumbs up. Good luck with your trading. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.